Hello everyone. My greetings to each one of you. I am Poonam Vohra from Egypt Economics Learning Center. From now onwards, the focus will be on the last unit of macroeconomics, that is balance of payments. So this session, let's understand what is it all about and what do we expect the learners to learn in this unit. Balance of payment is a record of all funds going in and out of the country. For example, when a country exports, say 100 shoes to another country, a credit is made in the balance of payments. It is used to monitor all international monetary transactions, all trades conducted by both private and public sectors are accounted for in balance of payment in order to determine how much money is going out of the country and is being received by the country. So the basic purpose of balance of payment accounting is to know the strength and weaknesses of the economy. By analyzing balance of payment accounts of the previous year, you can know the overall gains and losses from international trade. Balance of payment is a flow concept and is related to a given period of time. It uses double entry book system and has two sides. Credit side, which record all inflows, and debit side that records all outflows. Then one has to understand the components of balance of payment, which is categorized as current account and capital account, where current account maintains all the transactions relating to export and import of goods and services, including unilateral transfers, and capital account records all those transactions that affect assets and liabilities of the residents of the countries and the government. Then one needs to understand the three exchange rate regimes, that is fixed exchange rate system, which is also called as gold standard system, flexible exchange rate system, where the exchange rate is determined by the market forces of demand for and supply of currency, and managed floating exchange rate system, where though exchange rate is decided by the market forces, but government also intervenes in case of extreme fluctuations in the exchange rate. Sometimes students ask, why is there a need to study balance of payment? What are we going to get out of it? So, to explain why is it relevant, let's have a look at these points. Balance of payment accounts are relevant because 1. It shows the export-import status of a country. If exports are greater than imports, the level of aggregate demand tends to rise and it implies growth potential of the country. 2. Balance of payment account reflect investment by the foreigners in the purchase of stocks and bonds in the domestic market. Higher investment means healthy state of economy. So, it shows the extent of foreign direct investment, and increase in foreign direct investment implies GDP growth. 3. International borrowings is one of the most important component of balance of payment, and it shows the extent of countries' dependence on other nations. 4. Since all the foreign exchange transactions are routed through the central bank, balance of payment account reflects the movement of foreign exchange reserves with RBI. Healthy reserves are a sign of healthy economy. And 5. Balance of payment accounts helps the government to formulate a suitable growth policy In case growth process is disturbed through higher imports and low exports, government can take steps to curb imports and encourage exports. All these concepts relating to balance of payment are important to understand in order to have a comparison of the state of country's development with the development of other nations. So one must be aware of balance of payment accounts. Now let's see what are you expected to learn in this unit. By the end of this unit, you will understand the structure of balance of payment account. You will be able to differentiate between balance of trade and balance of payments. You will be able to identify the items to be included in the current account and the capital account of balance of payments. You will also be able to evaluate the three mechanisms of foreign exchange rate and represent diagrammatically the determination of foreign exchange rate. So this unit on balance of payment comprises of structure of balance of payment, components of balance of payments, fixed exchange rate system, flexible exchange rate system, and managed floating exchange rate system. To understand all these aspects, you will get reading material, 10 explanation videos, PowerPoint presentations, and case studies. For practice answering questions, you will have self-assessment based assessments which are either foundational in nature or competency based assignments. Foundational assignments comprise of the direct and the basic questions in one sentence answer, in multiple choice form, short answers and long answers, whereas competency based questions comprise of assertion reasoning based questions, case based questions, statement based questions, short answer and long answer relating to real economic events. Numericals are also there wherever needed. There are questions which are based on diagrammatic presentation too. So attempt all the questions as given in the assignments for having a deeper understanding of all the concepts. I hope in this introductory session you are quite clear about what is included in this unit, how are you expected to learn, what are you going to get, and how will you have a deeper understanding of this concept so that you are well prepared for your examination. This is going to serve not only the purpose of getting good scores in your examination, but also beyond that, as each concept is related to the real life event. If you practice more of competency based questions, you will have a fair idea of what actually is happening in the actual life situations. So, hoping to see you in the next session to begin with the unit. Thank you.